Okay. I would separate like the question into two parts. First of all, talk about the long term prediction. I'm very bullish. Since the very beginning, I'm very bullish on the crypto market and also the Bitcoin. And the first Bitcoin I bought was back in 2017. At that time, it was around 3,000 US dollar, and then I hold it till like 2020. After 2020, I didn't sell it. I didn't sell my Bitcoin or sell my ETH. I just shift my focus from traditional finance into crypto market by putting more and more quant trading strategies into crypto, and I found it really profitable, much more profitable than traditional finance. For example, in TradFi, if for equity trading strategy, maybe you would got like 20 or 30% annualized return. Uh, for this figure, it's not that small or not that big because you can just check out most of the hedge fund in the traditional market. They profit like 20 or 30% on average in the past 10 or 20 years. But for crypto market, the annualized return of institutional could be up to 100 or 200%. It's not that impossible because the market is much more volatile comparing to traditional market. So I would say I'm really bullish on the Bitcoin in the next 1 or 2 years because of the halving effect. You could just look at the like a historical pattern of halving, Bitcoin reward halving. Every time Bitcoin uh, does the reward halving mechanism, the price goes up after 1 or 2 years. For example, the first halving was happened in 2012, and then second one is 2016. The third one is 2020. So after every time after the halving happens, maybe around 12 months or 18 months later, the price would be a next bull run. So by predicting the like next halving is going to happen in next year April. So
Yeah,
I
yeah, bro.
think yeah, so I think Bitcoin's price would be another like new high in 2025. My prediction would be 10,000 would be 100,000 US dollar
Mm.
in 2025. So in long run, I would say I'm very bullish on it. But in short term, because the US government is having an eye on like centralized exchange, for example, Binance. So I think this would create like a short-term volatility in the market. And someone told me that Binance would may probably face a fine of up to 5 billion US dollar fine. So I think it's not that it may create some like volatility or a volatile price in short term, but in long term, after SEC approves the first spot Bitcoin ETF, and
Yeah,
then
yeah,
I think the market will go into another bull run after that.
yeah.
Yeah, not. So when comparing to CX, DX is way better, way safer than CX because they are not governed by people. They are governed by code. They are governed by a smart contract on the blockchain. So in on trading on DX, the risk of counterparty risk, or we call it third party risk, would be much lower
Yeah.
if you trade on DX. So the reason that I trade on DYDX is that I want to try to diversify my counterparty risk and also to diversify my third-party exchange risk. So I would say these are the advantage and also disadvantage of trading on CX and DX.
A bit about HostStation. HostStation just apply the account transactions directly on our product to like enhance user UI and UX. Like you guys can eliminate the gas paying process. You guys can adding the privacy protection onto your account. Like you guys can have the email recovery. You guys can have your phone recovery or 2FA recovery into your wallet, and your money in your wallet is your money. Like we
Mm.
cannot doing anything. Like we cannot like touch your crypto assets. We cannot like doing the scam week on your trading. Yeah, and that is my small advertisement.
Okay. Best experience. I would say the past 2 or 3 years are the like the most profitable time because I shift my focus from traditional finance into crypto. As I mentioned just now, uh, in traditional world, for example, if you trade equity, if you trade fixed income, if you trade forex or commodities, for example, gold, crude oil, most probably you would achieve like 30% or 20 to 30%, like every year. Don't talk about like 100% if you use leverage. I'm talking about in the long term average return, it would be 20 to 30% per year. But in crypto, it's really high, like 100 or 200 or 300, and maybe you don't really need to use a lot of high leverage trading. You could also achieve this kind of figures or numbers. So I would say the past 2 or 3 years, I shift my focus into crypto, and then I put my traditional finance strategy into crypto. And for example, just very simple way, like trading on momentum, just trade on momentum. For example, the price breakthrough or the price goes up, and then you just long it, you just buy the coin, and just using like 40 days or 50 days MA, you could also profit from the past 2 or 3 years. And the annualized return could go up to 80% or 70% per year. You could just do a very simple historical data check by using the past 3 years data. It's really easy to do it. You can also maybe using the Microsoft Excel to do this kind of like data backtesting. We call it backtesting because you use the historical data to check whether your strategy works or not. So I would say the past 2 or 3 years, I have a really stable return. I would say in terms of Sharpe ratio, we call it Sharpe ratio, which is a measurement to check if your return is stable or not. My Sharpe ratio currently over the past 2 or 3 years is around 2.9. 2.9 or 3, which is really which shows that the strategy is really stable and profitable in crypto market. So it's really hard for me to pick one single event of a very good trading experience because I do systematic trade for a long time. I've trade every day, more than 2,000 or 3,000 trades per day. So I would say the whole journey in crypto is really good experience for me. By the way, I trade mainly on BTC and ATH, perpetual contracts, instead of trading a spot or trading like other altcoins because most of the liquidities are on these two instruments.